All right, so we go straight to today's topic. Because today is Sunday, and ordinarily Ola is not expected to work today, so she didn't share the topic on the platform. But what we need to look at are financials, which is a very, very important part of procurement, especially if you will be looking out for funding. So we'll be looking at financial management for SMEs, financial management for SMEs, and then some strategies on how to do your proposal, especially how to write if you are looking for funding, your budgeting, everything financial, forecasting. We'll look a little bit at all of these things. But the topic, as it is in the curriculum, is financial preparedness and access to funding. We are going to lay emphasis on financial management for procurement success. And we'll look at grants, loans, and alternative financing for SMEs, especially in Nigeria. Because, like I said, so we don't look at it that it's the same thing all over the world. We have our own peculiarities, just as they also have their own peculiarities. So I will be sharing some slides and then just walk through. We do a walk through the slides. The slides are not many. Sorry, I'm trying to fish out my slides. Please mute your mic while I look for my slides. The slides are right here. I don't know why I didn't see them. I hope you can see my screen right now.
Yes, ma, I can see it.
Okay, so like I told you just now, financial preparedness and access to funding for SMEs in Nigeria. With emphasis on financial management for procurement success. That's what we have for today. I prepared 4 modules, and module 1 will be financial management. Financial management. We first want to look at the foundations, because before you can be in procurement at all, you need to understand financial management principles. the role of financial management in your business growth, and more so in procurement. The key financial statements, like your income statement, balance sheet, cash flow, bookkeeping, and record keeping practices. I don't know which ones you are practicing right now. Do you have any of these foundational principles in your business?
Yes, the bookkeeping and record keeping practices.
Okay. How about your balance sheet, your income, and your cash flow?
I've not really worked on a balance sheet.
You need to do that because when we look at a case study now, you will see the reasons why this has to be. Then for module 2, we're looking at budgeting and financial planning. When you create a business budget, the revenue and cost estimation. You know, when you are talking about budgets, you are looking at what you are putting into what you want to do. It doesn't mean that that's what you will spend, but at least that's a budget. That gives you like a plan. It gives you like a leeway. It gives you an understanding of what you are likely to spend. Okay, both in terms of revenue and even time. So you look at your business budget, revenue, and cost estimations. That's why we say it is a budget, because it's an estimation. It doesn't mean that if you budget 10,000 naira for pickup of a sample, it must be 10,000. Sometimes it's a little bit over, sometimes it's a little bit lower. And then we look at cash flow planning and working capital. I believe we'll be able to look at all of this in the hands-on example we'll be looking at. Then you must have budgeting tools, your simple Excel sheets or QuickBooks, Wave, and all of those. And you have to practice this exercise of 12-month SME budget planning. So you are going to look at your budget as an SME, you plan it for the next 12 months, that is 1 year. Then access to funding. When you are looking for funding, there are some bodies that you can really rely on, like TEF, that's Tony Elumelu Foundation, UWIN, Smidan, POI, and the rest of them. We can also include LSETF in this when you are looking for access to funding. And it's not only these bodies that we have even talked about. You can also do family and friends. You can access funding from your own savings. Like if you've had savings, or maybe you've worked with some bodies and then you are now retired, your retirement benefits will be part of the funding you are looking at. But the point is, when you are trying to put these funds into your business, you treat them as what they are. Because if you finish working in a place for, is it 35 years you guys are spending now, or 30 years, and then they pay you, and you just sink it into a business, there must be something that must come out of it for you. You must treat it, you don't treat it as if it's your own money that you are using to do your own business. Because the business, as we said during the last session, is a separate entity from you. That's why it has its own name and you have your own name. That's why you are registered. When you were born, you were registered at the birth registry. And this your own business, you also registered at CAC. So you are two different entities. And when you are putting in your funds, make sure that you are treating it as an external thing coming in. And in the same vein, if you have to borrow money from your business, mind that word that I use, borrow. It is not a dash. You cannot take the company's money to buy fufu and gari. You can borrow, but it has to go into the company's books as borrowed funds, director's loan or whatever. Remember, you said just now that you have bookkeeping. When you are keeping your books, that must be part of what you are keeping. Don't just put your hands into company's funds and do away with them. Loans, you can have loans from commercial banks, developmental banks, and microfinance banks. Then you have alternative financing. You can have equity. Okay. Some of the alternative financing is what I just talked about, your own personal funds, family and friends, and all of that. And also have equity. So you have people that are buying into the company. For instance, you are giving the company out to some people, maybe at 5%, you're saying you can have 5% of the company if you give us so much. That's equity. Then crowdfunding. But you must really be online for you to be able to do crowdfunding. You must be known on fintech, And we also have what we call funding readiness checklists. Do you think you can take a chance on telling us on some of the funding readiness you think you should have on the checklist? Hello, are you here? Are you for us or against us?
I'm here, ma. Sorry, I didn't know that I did not unmute myself. I was talking to myself. The funding readiness checklist, I may say, having a registered business, having a corporate account. What else again? Having a physical shop. What again?
We mentioned
collateral.
Funding readiness. Okay, well, maybe, yeah.
That's all I can remember for now.
Okay, so you mentioned registration business, registered business. This is actually under business documentation. We talked at length about business documentation the last time.
Yes.
So you need to put all of those, the checklists under business documentation is where you have the registered business name. Then you must have valid tax. I told you that. Tax identification number, that's 10, because you must be a taxpayer. Okay? And when you are talking about CAC certificates, you also should know that you must have your MEMAT. It's very important that you have a MEMAT, that is Memorandum of Articles and of Association, if you are running a limited liability company. Yes, I think you mentioned business bank accounts. That's very key. Then your business plan. I told you this the last time. Your business plan. And we also mentioned what must be in your business plan. Your executive summary with your clear value proposition. What are you doing differently? Then detailed product service description. You mentioned that as well. That's under your business plan. Your market and competitors analysis. Then those who will do the work. Your operational plan and your staffing plan. Who are they? What do they do? And you must have financial projections. That's why we're actually talking about this today. You have to have your statements, your fund statements. Your financial records must be up to date. Your income statements, balance sheets, your cash flow. I mentioned that. And in the last slide, I also mentioned to you 12-month budget plan, at least 12 months. At the last session, I told you about how we had 5-year session. 5-year plan, business plan, where what we'll be doing, what should be happening in the next 5 years, God being our helper. Then your tax returns, the business tax returns, at least for the past 1 to 2 years, say 2 years, most of the time. Okay? And you must be found to be credit worthy. Credit worthiness is very key. So when you give people your BVN, I hope you know that what you have just done is to open all your banks, all your business transactions to them. Because once your BVN is punched in, everything you've done will come out. So you must be credit worthy. When you have BVN of the business owner, your credit reports will come out. You must not have any outstanding or unresolved debts. Yes, it's under credit worthiness actually that we talk about the collateral, because your collateral makes it obvious to people that you are credit worthy. That is, they can rely on you, they can give you something because they know that at least you have something that can stand in for you. And apart from all of these things, your organization must be seen, to have very clear organizational structure. Your structure must be there. Even if you are the only one, if it's a one-man business and you are permitted by what they need to procure for whatever you are asking for, once they allowed a one-man business, then you can do it. But this one-man's business must also be well organized. You must be able to prove to them that you are organized, you have a structure, even though you are the only one. Okay? And you are qualified enough. If you are the only one, you are qualified and experienced enough to handle what you are asking for. If you are not, then you must show that you have qualified and experienced team, that will be responsible for all of this. Then your internal controls and financial management processes must be tip-top. You must show that you have internal controls. What are internal controls? Like even your ordinary recording. That's a means of controlling internally. So when we are buying pencil, we record it. When we are giving the gateman a dash, we record it. When Madam is borrowing money from the company, it is recorded. That's internal control. So nobody can just say, oh, the money just got missing. We don't know what happened. Then we are going to say, was it recorded? Let's check. Internal controls and financial management processes. All your processes must be made available. And your procurement process, how do you buy things? In your own management too, you also procure certain things. It's just that you are now learning about procurement, affirmative procurement and all of that. And you are thinking that this procurement thing is only for big companies, and you are the only one that will have to go there to beg for them to let you do procurement for them. Even in your own business, you are also doing some procurement. You are buying from people and people are doing procurement for you. Even though maybe they did not apply, as you are now applying to organizations, but in one way or the other, you are procuring certain things. So you must have that process. How do you buy what you need? How do you buy your raw materials if you are into production? And so on and so forth. Then, if you are, when we are still looking at this funding readiness checklist, if you want a grant, you must have some specific requirements. if you're applying for grants. But it's possible that you just see an organization that says, oh, we give grants, or somebody points out. It's not just that you just apply and they will give you. There are some specific requirements. For instance, there must be an impact that you are given, social or economic impact. Your business social and economic impact must be clearly defined. What you are doing to affect humanity socially and economically must be there before you are given grants, because the grant didn't just fall from heaven. They too probably took it from somewhere to manage certain requirements. So those things that they are supposed to use the funds for, that is the donors' thematic areas, must align with what you are doing, or what you are doing must align with the donors' thematic areas. That is what they really want to get out of life. For instance, some donors, their own concern maybe could be about raped victims. So you cannot just say, oh, I'm selling pots and pans, so come and give me grants to do business. It's not aligning with their own mission and vision, so they are not going to give you. So there must be some specific areas that you are fulfilling. And you must have monitoring and evaluation plan for you to be able to get grants. You must comply with reporting and audit requirements. Your business must be well audited so that they know that when they give you the grants, you're not just going to use it for Google and EPA, that you're really going to use it to affect humanity. Then if it's a loan, there are also specific requirements if you are requesting or applying for loans. You must know exactly how much you need. Because I've met a lot of people that they will say, oh, ma, please help us. We want to take loan. Where can we obtain these loans? And you, even me, I'm asking them, how much loan do you want? They don't know. All they know is that they want a loan. So the loan amount must be there, because you know what you really want to use the loan for. Then you have the loan amount right there in your plans and your repayment plan. This is even one of the things I heard in church today during our empowerment service. You cannot take loan without having a plan. Even if you are taking a loan from your child, or you are taking a loan from your husband, there must be a plan to pay back. And when you are planning to pay back, you must have how you will pay back, as in, okay, when I make out of this 10,000 naira you have borrowed me, I will use it to do business. When I do this business, I have planned it and I have budgeted, I have forecasted that I'll probably be making like 15,000 naira. So when I make my first 8,000 naira, using this 10,000 naira, I will pay back 4,000. The plan must be there. You do not service only the interest, because some people will borrow money. Maybe they borrow 30 million, and every month the interest is probably let's say 300,000. They will only be pursuing paying the 300,000. The plan should be that you will pay the interest that has accrued for that month, and you also pay parts of the capital. Because if you only pay the interest, remember we are talking the financials right now. This is why all of these are coming up. So if you do not pay your capital, next month, the interest that will accrue may even be more than the one for this month, because everything is appreciating. So as you are paying the interest, you're also supposed to be paying the capital. And for instance, if you have paid off some of the capital, next month, the capital will have reduced. So the interest accruable to would have been reduced, you know? So that's how to manage all of these things. So when you want to take a loan, you must have how to pay the loan back. The repayment plan must be there. And your interest and risk analysis must be completed. If you do not know how to do it yourself, you look for somebody who will help you to do it. The analysis of the interest, that's part of what I just analyzed now, you know, and the risk analysis must be completed. Then, of course, if you are taking a loan, you must have your personal guarantee or a collateral Your loan purpose, just as we talk about the grant being in alignment with the thematic areas of the donors, when you are taking a loan, to your loan purpose must be linked to your business growth or procurement. You don't just take a loan for taking sake. And when you are using alternative financing, if you are using the alternative way to finance, then your pitch deck must be there. If you are looking for equity investors, for instance, you want somebody to come and invest in your business, you must be able to sell your business well to this person. So that's what we mean by your pitch deck. You need to tell the person about yourself, about your business, and how your business will help him or her. The person doesn't care that you need that money. What the person cares about is how it will affect his own life. So your pitch deck must be such that will bring out how that person will be helped. Even though you know that it's actually you that you are looking for the help. And you must also define the exit strategy for these investors, because they are not coming there to stay forever. Their exit strategies must be there. If you are bringing them in, there must be a time to come and a time to go. So the exit strategy will also be there. And if you want to do crowdfunding, I refer to crowdfunding as an alternative financing means. You must be present digitally. Your digital presence must be A1. Okay, before you can be eligible for crowdfunding and be credible. You can go and try it, but if you're not credible, nobody is going to answer you. So your digital presence must be there, because those who are crowdfunding for you, they have not met you physically. But if they have met you digitally, then that would be awesome. Okay? And also your community engagement or your tradition evidence, the way that people in your community even know you. You are engaged with your community, and you must be able to show a lot of traction. You know, the evidence of traction must be there, what you have done for the community and stuff like that. Okay, so that is that for module 3. When you are looking for grants, loans, alternative financing, then the module 4 speaks to financial management for procurement. When you want to manage your finances for procurement, you must have your procurement budgeting and costing. It's just what we have been talking about also. There must be budgeting and costing. Because if you want to procure, and you don't even know how much what you want to supply will cost, then that's a problem. You know, your cash flow must sync with the procurement. Your cash flow must be in sync with your procurement. Okay? For instance, when we are saying that your procurement budgeting and costing must be in place, what it means is that planning and estimating all your costs, you know, associated with these goods you want to purchase or services needed for the business or to fulfill a contract must be in place. Number one, you have to identify if you want to procure for somebody, like if you say, okay, you want to make uniforms for a company, okay, you have to identify what you will need, the raw materials. What will you need for these uniforms? Is it going to be silk material? Is it going to be cotton material? Are you going to import? You know, so this is what we mean by your procurement, budgeting, and costing, the planning. You estimate all the costs. You identify, and the steps for estimating will involve you identifying what you need to buy, like the raw material. You get the prices, you get the quotes, okay? And you have to do, when you are quoting, in fact, when people also are quoting for you, you must make sure that is in multiples. That is, you are getting your quotes from multiple suppliers. You are not just pitching your tent with only one person. So you get the price quotes, and you will include some additional costs, you know, like transportation. If you are going to import, like import duties. If you are going to warehouse, if you have to keep them for a while, then you have to put all these costs. You will include the additional costs, okay? And you have to also put into consideration inflation or price changes. So you may be looking at adding like 5 to 10% for contingencies, unforeseen costs, you know, then you set a total budget. This total budget must align with your available capital or funding that you have. If it is not, you go over it again and again until it is in conformity. And you see, for you to get all this done properly, you must know how to prepare a cost sheet. So for every procurement order you have, you must have a cost sheet so that you can track your spendings, you can track what goes into that procurement, and then you'll be able to justify your expenses. I hope you are understanding all of these things.
Yes, ma'am.
They are very key, but they are just, they are no-brainers. Let me put it that way. We're only just talking about them so that we can remind ourselves of what we ought to have known, you know? Because how will you want to do procurement and then you are not planning the cost and the budgets? It's not possible now. So you will need to look at that. And those are the steps involved. Then when we are talking about your cash flow to be in sync with procurement, what this means is that you have to align your cash inflow, that is money that is coming in, and outflow, that is payments for this procurement that you want to do. So you don't run out of money. You must make sure that what you have or the money that is coming in, you know, tallies with what will be going out for this, your procurement, for payment of whatever you need for the procurement. And how do you do this? You have to look for your payment timelines. You have to know when you will have money. If you don't have money for a procurement, it's better you don't take that at all, because you know they have in fact, all procurements are timed. There's nobody that wants to give you jobs that won't say, when are you supplying? Even you, if you want to give your clothes to a tailor now, we'll ask the tailor. In fact, you are the one that will tell the tailor, I want to collect my clothes next tomorrow. It's tailor now that will be begging you, please, now, can I just make it in 1 week? So it's the same thing. So when you want to do any procurement, you must make sure that your payment timelines tally with when you will have money, for the procurements you want to do. And then you will now plan your procurement payments accordingly. Okay? You can negotiate payments from suppliers. We'll get to that as well. We'll get to that when we get to purchasing strategies, because there are some strategies you also use to purchase when you are doing procurement so that everything doesn't just weigh you down. We need to track your own cash flow so that it can be in sync with the procurement, excuse me, as you spend on the procurement. Okay, so for instance, now, if your contract, the person you are taking the job from, if they are going to pay you in 60 days, then you must know how you are going to negotiate with your suppliers so that everything can be, in sync. You are not just out of cash anyhow like that. For instance, if you say you want to pay your supplier in 30 days and the people that you are doing the contract for will pay you in 60 days, then you must have a special arrangement with that your supplier. And that could be more expensive for you because what that supplier will be doing for you is like a short-term financing. It's like a short-term, and when you are paying something immediately, it is cheaper than when you are giving a longer time before you pay. They too have not come to wherever they are to look at bridges. So we will need to put that into consideration. Then when we talk about supplier payments, strategies, and risk management, that's what I was saying that we'll come to. Your own supplier, you can also formulate some strategies so that you can minimize your exposure. For instance, you can look for smart ways of paying your supplier so that you can keep your good cash flow and manage procurement risk. Okay? Some of the strategies are off my head now. Okay, you can negotiate payment terms. You can actually negotiate payment terms. So for instance, if you look at the money, your inflow, you can say, okay, I'll pay you 30% now, and then 70% at delivery. This will give you some time, to look for money. Okay. Then you can also ask for discounts. For instance, if you are going to pay immediately, you can ask for discount that I'm paying you right away. So give me 5% discounts, 10% discount, and so on. These are just strategies to minimize your exposure. Then, if the order is actually large, if you are buying so much from this person, you can decide on using what we call milestone payments. So you pay in phases. If this person is probably manufacturing something for you that you are going to supply, you can tell the person that, okay, when you start, I'll give you 30%. When you build it up to this level, then I'll give you another 20%. With that, you can be using that to look for money to fix this procurement. Okay? You can also have many suppliers. So you don't rely on only one supplier. You reduce your reliance on just one. So you are not even disappointed. And then, like if you are giving 10 suppliers 1% each, it's better for you than giving one supplier 10% down payment, because at that stage, you will be expecting these goods from 10 sources. And whenever, this is very, very important, whenever you are using a supplier to do your procurement or even to do your business in any way, you must include contracts. There must be a written contract and there must be penalties. There must be penalties for either delay in supplying you or low quality goods, because this will definitely bring the suppliers to speed. Remember that those who want to go and do this job for, they don't care. They are not going to look at you. If you give them substandard things, they will reject them. And that's a whole lot of debt on your own. Then if you delay also, because whatever you want to do is also timed, if you delay, they are going to penalize you. So it's better you start it from your own So that's what we mean by supplier payment strategies and risk management. What you are doing all of this is to manage your risk. Okay. Now to financial risk in procurement. The money-related problems that can arise when you are buying goods or services is what we are looking at when we say risk in procurement. And there are many risks. The commonest ones are price volatility. I used to think that is in crypto because I'm also a crypto trader. I train in blockchain um, technology as well. So I used to think that it's only in crypto that we have volatility, but that's not so. Prices can be very volatile. There can be unexpected increases, something that you price today, even common Ankara, you want to buy Ankara for an occasion, and you've gone to them to say, I will need this Ankara, how many? 20 bills. How much? 3,500 naira per one. Okay, let me quickly go and let the people that will need this know. You may get there 2 days after, and they are telling you that what they call for you 3,500 has become 5,000. And it's not their fault. That's the rate the dollar has gone. And if they are importing these things, then they have to put their own markup as well. So this is a very common risk in supply. This is why you have to put the contingencies, just like I explained earlier on, for unforeseen circumstances. This is a very common risk, price volatility. And of course, it is the currency fluctuations that affect price volatilities most of the time. Although it's not all the time. Sometimes the price volatility is also due to the greed of the sellers. But then you cannot control their greed. They are the ones selling their stuffs. So if you are importing these things, exchange rates can just hamper whatever it is that you have put as your cost. You have to put that at the back of your mind. Then delays from your suppliers, delays or even non-delivery at all. Some suppliers can carry your money and vamoose. So these are all common risks. Then fraud or theft, maybe from even internally, your staff or fake suppliers who will definitely who may be overbilling you. That's fraud. It can happen. Then if you do not do your cash flow properly, there can be cash flow mismatch. If you go ahead and pay your suppliers before receiving money from clients, you have not collected money, you've already paid, and maybe they are now saying they don't have the money or whatever. That is also one of the risks we face in procurement. So how do you manage this risk? Because I won't just give you risk and then I will look at it and then we go off. You manage all this risk by what we have been discussing. You include, for instance, contingency margins in your budgets. When you are preparing your budgets, you must put contingency margins. Don't freak out to look at it that, oh, my prices may be too high, then they won't pick me. It's better for you not to even do a job at all than for you to be chosen to do it and you are not able to supply, or you supply at a loss. Okay? And when you are contracting your purchases to people, like I said earlier on, use contracts with very clear terms and you put the penalties. If it's a large supply, I will also advise, especially when you are importing, or when the goods are going to be in transit, like you are supplying somebody in Lagos and you are in Abuja, I will advise you also purchase insurance. You insure the goods, okay? You insure the goods. This person is just coming in at when we started 45 minutes ago. So I'm just going to remove her. I won't admit her. Yes. People should learn to be responsive. So today is Sunday. I can be doing something else. So if I decide to come and teach on a Sunday, then the person you want to teach is just coming in almost an hour late. That's really rude. Okay, so you include contingency margins, and I'm not going to share the recording of this meeting. So if you people like, you can come to meeting and think that, okay, maybe they will record it and I will see. This particular meeting, I will not share it. So I was saying you will include contingency margins in budgets. Make sure you have your contracts. What else have I said? I said you purchase insurance if it's for large imports of goods in transit, and build a reserve fund so that you can have a place to turn to. You have to access short-term credits. You have to build a reserve fund. You have to build a reserve fund. So I hope you understand all of this, because the next thing we would like to do now is to have a case study. A case study of SME procurement contracts. So for instance, let's look at it together because it's a case study. This SME needs 5 million for a government contract. I've already told you, we've talked about all of these things inter alia. And I'm now saying that what this person needs to do is to develop financial plan and funding strategy, because that's what will be expected of you. You may be considering grants, loans, or alternative funding. And then you have to align your plan with your procurement timeline, just as we have talked through now. Okay? We want to look at how this person will develop the financial plan. What do you think should be the first thing this person will do? He has a government contract to fulfill. He needs 5 million.
This person will first of all go for the market survey. First of all, go for the market survey and compare prices with other suppliers, so that he will really know how much he needs, because he may not spend the whole of the 5 million. So he has to strategize how he can make some profit out of this 5 million. And then if he does not have this money on ground, he has to think about how to get loan or how to get a good supplier that he can negotiate the payment terms.
Okay. I just put this one there to be a little bit trickish, because I just said an SME needs 5 million for a government contract. Won't this SME even understand what the contract is? What is it to supply? We're just saying that it needs 5 million for a government contract. The very first thing is to even know what he wants to supply. If it is office equipment, medical kits, agro inputs, uniforms for government schools, uniforms for government-owned industries and stuff like that, he must first, remember we said it, in fact, in 2 sessions now, we've mentioned it, you must do the assessment, the needs assessment. So if they just say, oh yeah, we need SME, to come and do a government contract for 5 million. You need to find out. And then I did not say that the contract worth is 5 million. I said he needs. So this doesn't mean that the contract worth is 5 million. The contract worth may be more than 5 million. Okay? So the very first thing is that the person will look at, what am I to supply? What will be the costs? Then before we get to this, his own need of 5 million. But you've tried with all that you have said. You've done quite a lot into it. If he has to first check for prices, and like we have said, you don't pitch your tent with only one supplier. So you look out for many suppliers, and the person will probably be looking out for local suppliers. Okay, so this contract value, let's assume that is 7.5 million. But what he needs, because you don't want to assume that 5 million is what he needs and 5 million is the worth of the contract. So why is he doing the contract? Do you understand what I'm saying?
Yes, ma'am.
There must be a profit now. So definitely, if he needs 5 million, this contract is worth more than 5 million. He needs 5 million to execute the contract. This contract must be worth than 5 million. So let's assume that this contract is 7.5 million. So we'll put the contract value at 7.5 million. Okay? But he needs 5 million upfront for procurement. And then he will also find out exactly what the payment terms, the contract terms are. Because it's when you know the contract terms now that you will know whether it's even doable for you. For instance, if they say payment on delivery within 60 days, this means that you will deliver and then they will now pay you 60 days after delivery. And if I may share one of my experiences with you, I've done a job for a company in Lagos, and they said their payment terms will be 30 days after delivery. These 30 days, you won't believe, went up to 120 days. Yeah. So it's not always they have said 60 days, so it will be 60 days. A lot of things can also happen to them. They may have change of management, although that shouldn't change their contract terms. But you know, that's why I always put it across that we have our peculiarities in this country. Certain things people do here would forget them in jail elsewhere. But we have a way of even making excuses for them. Maybe they have management change. Maybe they too don't have money. You know, there was even a day, this was a long time now. My children were still very young. Because I knew that I was going to this company to ask for my money many, many days after their contract terms had expired. Okay. I employed a driver. I did not do a background check. Like I employed a driver yesterday. I carried him today. He was with me. I had already planned, I was testing him. I had already planned that I will pick the children from school after branching at this company to ask for my money. And you know, this cash flow, this is why I'm sharing this experience, because this is all what mentoring is actually. Mentoring is not supposed to be another lecturing part. I'm only trying to put up slides and all of that, because I know that most of you did not probably understand what you were taught in the at the program, or maybe you were not even taught this at all. So that's why I'm chipping this in. But I'm supposed to share experiences with you, life experiences. So we went to this company. My plan was that I would be done because they promised me again, pick the check that day. So I was thinking that I'll just get their pick check. Then they were delaying. And we were many, others were there. So if I go off, I will miss my slots. That day, they didn't pay us still. But if you know the risk I put myself, I now told this new driver to go and pick my children from school. I didn't even think about the repercussion. I told this driver to go and pick my children, but God Almighty was with me and is still with me, and he will continue to be with me eternally. This driver took my car and everything. A driver that I have not even, no guarantor. These are the things, this is just like a pullback from what they could do to you. So you don't put your mind there that they have said 30 days, so it will be 30 days. And for me to be so, what do I call it now? Desperate to stay there. You can imagine what that money meant to my business. Okay, so fortunately, he went, picked the children. I don't remember whether he came to me there, and then we went home together. But God didn't allow him to carry away my children or to carry away the car. The next day, this driver did not come. That night, that day, stroke next day, my office was boggled. And the very first suspect that I could ever think about was that driver. And I believe that it was God's way of telling me that I only saved you from this, because office boggled and children stolen. Which one?
I know children is better to be safe.
Which one? Or even office boggled, car stolen, or whatever. He returned my car, he returned my children, but that was too much of a coincidence if it was one. And he just vamoosed. We didn't see him again. For just no reason. One day work. And that was the only thing he did. He took me to this company. We were waiting there. And I thought about it. Hey, if I go now, he said, okay, so there's a driver there. Instead of me following the driver, let me just tell the driver to go and pick the children, and then I'll be here. That's nice.
Those days were still good. People were still good.
Which people? Was I a good person? Kidnapping had always been now, right from the time I was growing up. Maybe that's why we have Bomo. This kidnapping they are doing now is Bomo now. They've been kidnapping all the while. It's not new. They've only just commercialized it in a big way. And at that stage, little children, they used to kidnap when we were growing up. But right now, they kidnap adults, they kidnap everybody. They can even kidnap the president if he's not careful.
It's true.
So these are the things you have to put into consideration. Don't trust totally that when they say 60, so you have to put the gaps, you have to put everything you have, you have to put your mind at it. So this is why you have to put money properly. Don't look at it that, so that they can give me, and then you now go ahead and shortchange yourself. You don't do that. If you do it, you will not like it at the end of the day. So now let's quickly look at, if you want to do financial plan, I just want to run through the development of financial plan and funding strategy with you. So you know, when I said he needs, I'm still going back to that. He needs 5 million does not mean that the worth of the contract should be 5 million. So what we are trying to express in this is that when you have a job, what you need to execute this job must be lower than the value of the contract. If it is higher, then you are running at a loss. Okay? So when you are developing the financial plan, you must have a breakdown. The first breakdown you want to have, remember we said he needs 5 million procurement money for this contract. So you will have a budget breakdown. And in your budget breakdown, we are looking at what do I need? So let's assume that this person wants to supply maybe office equipment, or anything, just anything. If this thing will need raw materials, you have to budget for the raw materials. So for instance, for this 5 million estimate, let's look at it this way, because we have to put something out. Whatever you have estimated must be equal to the money you are looking for or the money you have at hand. Okay, so let's say, for instance, the raw materials or the goods will cost 3.5 million. Okay, then you are looking at the logistics. If you are the one that will also deliver these goods, let's say this will cost 500,000 naira. If they are goods that you have to finish, package, and label, you have to also budget for that. Let's say we put 200,000 naira for that. And you budget for labor. Even if you are the one doing the labor job, you have to put money, you have to monetize it. Because if you are hiring people to do it, you will pay them. And even if you are the only one and then you now want to hire temporary staff, then you look at labor and temporary staff, let's say 300,000. Most of the time, the industry standard, when you are looking at putting contingencies, is normally usually between 10 to 20%. So let's say we are putting 10% contingency. Contingency like, they did not pay this money on time. Do you understand? Because if I had put a lot of contingencies and I get there and they say, your check is not ready, I'll just turn back because I'm comfortable. I've already put a lot. But at that stage that I was desperate for my money, I was already losing. I was looking at that. If I had borrowed this money from the bank and they are charging me interest, something that I would have told them I want to use for 30 days is now going to 120 days. That's multiplied by 4. You know? So, because when you see people doing procurement, never like that. So, but you do take action, the World Bank, UN Women. This is why all these bodies are trying to train. With my camera out there, still saying my internet is not stable. This is why all these bodies are just being magnanimous, teaching people ahead of time so that you know what is before you. It's not just having the job. So you are not just seeing cash flow without seeing any profits. Money will be entering now. Maybe when they pay, you drop the check in your account. It will be there, but is it with profits? No. And that's not how to do business. So when you look at that, the total, if you calculate what I have given you now, we said the goods itself is 3.5 million, logistics 500,000. I hope you are putting this down. Packaging and labeling 200,000, labor or temporary staff 300,000, contingency, let's use 10%, 500,000. How much is that in total? How much is that in total?
8.5, ma.
Sorry?
Let's see. This is 3, 3, 6, 7, 8. 8.5.
8.5.
Yes, ma.
On top of my head, I said raw material do 3.5. 3.5 plus logistics of 500,000. That's 4 million.
That's 4.
Then packaging and labeling 200,000. That's 4.2.
That's 6.
Labor and staff 300,000. That's 4.5. Contingency as 10%, 500,000. That's 5 million. Now, where did you get 8.5 million?
Oh. Okay. Okay, this is 4. Oh.
When you want to do business, you must know arithmetic very well. Otherwise, because this one is just, it's not even math, it's simple arithmetic.
Yes.
For you, you mistakenly pay Supplier 8 million instead of 5 million.
I was adding the 100 as millions.
Okay. So that's the first thing you do. That's your budget breakdown. That is how this 5 million I need will be used. When you have the budget breakdown, then you now look at the cash flow planning. How do you plan your cash flow? You have to do this looking at the timeline given by the people you want to supply the goods to. So, for instance, if they say you can supply like in 8 weeks, then you probably want to look at month one, you disburse the funds to suppliers. You give the funds to suppliers that you can monitor them and then they can supply. Then by month two, you are fulfilling the contract because they told you 8 weeks. Since they said that is it 30 days after supply, then you will be looking at it that, okay, if this if this government contract is 8.5 million or 7.5 million, then by month three, I should receive this in my account. This is your cash flow planning now. You must have all this plan written down. So you are looking at it, if it's 7.5 million for a contract, for instance, then you are saying, aha, thank God, I've made 2.5 million profits. And remember, this will be before taxes and your overheads. So this 2.5 million that you have made is not total. It's not the all-round figures of your profits. You're still going to look at taxes and you're still going to look at your overheads. You were probably doing the business from a place. You need to monetize your rent, electricity bills, and all of those. Then another strategy you have to put in place, apart from your financial plan, is the budgeting breakdown, and the cash flow is under your financial plan. Then you have to look for funding strategy if you don't have the money. So you are looking at maybe donor or grants, or maybe SMEDAN, if they have matching funds. Most of the time, they give these funds out through BOI, Bank of Industry. Or maybe you want to go and apply for Tony Elumelu Foundation grants, like I said earlier on, you know. But looking for funds has its own pros and cons as well. So if you are looking at government, whatever, in Nigeria, it's not so reliable. It's not so reliable. And it's very competitive. It's also time consuming. I'm not trying to discourage you. I'm only telling you the truth. So if you apply for a funding and they are taking forever, you even told me that you are a civil servant. Were you the one that said you are a civil servant?
Yes, ma. Yes, ma.
Which ministry are you working at?
I'm working with SCDA. FCDA.
SDG. Okay, FCDA.
FCDA.
Yeah, okay. You also know what you guys do in your office, keeping people's files. When you people will not treat people's files, that's the same thing that happens when you carry your file to BOI or you carry it to any government agency. That's what you guys also will see. Anyway, that's just to let you know that if they say that you must supply something within 8 weeks and you are applying for grants or for loan to do this with governments, it may be counterproductive, especially in Nigeria. If it's abroad, they're actually begging you to come and take the loans because they know that it's in giving you loans that they make money. But in Nigeria, they think they are doing you a favor. I'm only just telling you the truth because that's what I should be able to do. But they are available, you know. They are very, very available, but they are competitive and time consuming, you know, and you don't even have any time in mind that this can come up. You may apply and it will not come up even until the bid expires, and that won't be okay. Then you can also apply for short-term loan. And I believe that this is a preferred option because um, you can go to even the Bank of Industry too. The Bank of Industry gives short-term loans. You can go to microfinance banks. You can go to fintech lenders. Like you have Lydia or Carbon. They are all available. There are so many fintech lenders in Nigeria now. Some of them even jump at me, you know, arbitrarily, and I'm like, how do people know that I'm looking for money? I'm looking for money, but I'm not looking for your loans. I beg. So there are so many fintech lenders. If you have your LPO, that's your purchasing order, they can finance it. They can also finance your working capital, you know. I know that Bank of Industry finances working capital, and some commercial banks will also do that, just the interest, you know. Sometimes the interest can be as high as 9 to 15%, but you can have very short tenure of maybe 3, 4, 5, or 6 months, and you can repay from that your contract in 60, and that will be paid to you in 60 days. So when you are using the short-term loans, you can see that you have quick access to the cash and you can repay from your income from the contract. And you can still maintain control over your business.
Hello, ma.
Then
Hello, ma.
the another, yeah.
The audio was off. I didn't hear you again, ma.
My audio is still on.
Okay.
I said using short-term loans that you have quick access to cash. Maybe my voice went down because actually I'm tired. I'm only just managing to close it. So, and then you can repay from your contract's income, from the money, because the term, you know, is short. It's a short-term loan. They will have given it to you before you finish your contract. So when you collect your contract money, you pay them back. Then you can also use alternative financing, just as we have expressed before. For this particular contract as well, you can negotiate part payments, you know, they call it supplier's credit. Like the people that have given you the job, you can ask them for part payments. They used to give us even without asking them to before. But right now, most companies have stopped, especially the companies. And I'm not sure the government does that. I don't know. Now, you negotiate part payments. The government doesn't even do it again. They don't do it again. Because people will collect money and they won't fulfill the contract. And then they will have to be chasing them up and down and all of that. So you have to go and look for money to execute any job you are given, and then they'll promise to give you maybe 30, 60 days after, depending on whatever you signed with them. But you can negotiate suppliers' credits. Then you can do crowdfunding if you have good presence and you have good social capital, like I said earlier. You can use crowdfunding. You can also use angel investor. Okay. There is also something they call invoice discounting. You know, you get your funds faster by selling the invoice to a factoring firm. I used to know some of them that do this. You know, you get the funds faster because you give them the job as if it is their own. So you defer your payments to them. defer your payments to them. They give you the money to execute the job. So when payment is coming, it actually gets to them. They give you back your change. Then you have to align. The third thing this person has to do is to align plan with procurement timeline. So, for instance, if they give you 8 weeks to supply, like we have said, 8 weeks to supply, you have to do your timeline arrangements. So if you are saying that week 1 and 2 will be for you to get the loan, get the approval, so you can see why you cannot rely on government loan now. Because if you have only 2 weeks to finalize your loan or grant or whatever and get the approval, and then by the second, so maybe third, fourth week, you are doing the disbursements, you are paying your suppliers, and then you start your procurement. You know, by the 6th week, by the end of the sixth week, if they gave you 8 weeks, you must have fulfilled this order. And you are thinking of delivering the goods, because it's better for you to under promise and over deliver than for you to have promised them that, hey, I'm able to do it in 8 weeks, and then 10 weeks, 12 weeks, you have not delivered. So even if they have given you 8 weeks, by the end of the 6th week, going to 7th week, you should be able to deliver the goods. And then since they've given you 8 weeks, then you receive your payments depending on what you have agreed. If they say payments on delivery, then you receive your payments, and then you repay your loan and retain your profits. In all of this, you will need also to mitigate your risk. And I want to dwell more on that, because these are mistakes a lot of us have made, and I'm not too sure it's good for people coming after us to make this kind of mistakes again. You must mitigate risk. So you must always include at least 10% contingency fees in your budget. 10% contingency in your budget, at least 10%. Then make sure that you confirm contract payment terms, and make sure that it's in writing. Don't let them say, we will do it. It has to be in writing, because they also know that when they give you something in writing, then they can face legal option if they do not do what they have written. No matter how desperate you are, make sure that all these things are properly mitigated. Confirm contract payment terms in writing. Make sure that they give you PO, that's the purchasing order. You know, don't just go and do it because they say you should go and do it. And if the goods, especially goods, if they are going to be in transit, especially in this country where nowhere is safe, make sure that you get short-term insurance. You should have insurance. If peradventure the goods are going to be in transit, or in transit, either when we are talking about in transit, we mean either by road or by air or by sea. So even if you are importing too, you need to have your short-term insurance. I believe we've done justice to this topic. And if you have any other questions that I have not answered while talking, please feel free to talk about it. Thank you for being here. And it is question o'clock. That's question time. Any question?
Thank you so much, Ma, for your time. Thank you for finding out time to be here and to give your vast experience I really appreciate it, ma. I have learned so much, especially in the risk management. There are so many things that I've grabbed today that I never even thought of. Oh, I really appreciate you, ma. Thank you so much. May God continue to strengthen you.
Amen. Thank you. So you don't have any question for now?
No question, ma.
Okay. All right then. So that's how it goes. I have the best of the week.
Thank you,
And
ma, and enjoy your week, ma.
yeah, I'll try. I'll enjoy my week working.
Thank you, ma.
All right. So bye-bye
Yes,
and
ma.
happy Mother's
Bye-bye,
Day.
ma. The
Bye.
same to you, ma. Happy Mother's Day. More grace.